Well, welcome back, everyone. It's the day before the FOMC, and markets are not disturbed by this. They are, in fact, fighting their way tooth and nail to hang and hold right up near those new all-time highs sketched out today. You can see that in the hard right edge of the screen here with the SPY, the S&P 500, the market, poking out to new all-time highs, fresh highs at, you can see that on the top left-hand corner of the screen over there, at the $566.57 marker. Now this, not a substantially higher high, but that door is now open, and the thought process provided to members in the active trader room over at becomeabettertrader.com and streamed live to WealthCharts directly from the active trader room, we let folks know that it's unlikely that Powell is going to want to do something that upsets the apple cart. It's more likely that embellishment or extra underlines and circles on words and or introducing new words can inspire a little bit of machine-led buying. That's not necessarily going to last for very long, but something that can take us to in the area of the 575-ish area potentially for this buy. Now that's something that's objectively signaled on a day-over-day time frame using Rob Hoffman, 33-time international domestic real money on-site trading champion, the only one we know of in this world. He's designed these tools to be simple to understand. They have a sequence, and what I want to show you is there is a objective target sitting in that $575 area on a daily chart using Rob's TRP indicator. I'm going to show you that right now, and you'll see it on the daily chart that I'm pointing to right over here, and that's where it is. Now, that's an area where if we get what we think we're going to get from Powell, which the market is already starting to assume a little more is coming, but a 25 basis point rate cut. If we get that, and he tells the line on the messaging, adds a little embellishment, this event is not likely going to act like a speed bump and everything's going to be okay, but it will very likely allow prices to rise and hover for a little while. 1 to 3 days, closer to 1. However, if we get Powell doing something that breaks from ranks, he usually very well telegraphs exactly what he's going to do. And then he goes and does it, answers some questions, it's a little volatility, and then the market goes on. Where we are right now is a very different market. We're not looking at monetary policy becoming easier, affecting growth, consumer growth, in the same way that it has in the past. We're in a very different spot. Heavy inflation, consumers' coffers are dry, chock full of debt that's very expensive, and the transmission of this rate cut, whether it's 50 basis points or 25 basis points, is unlikely going to affect Main Street very quickly. Do we actually have the technical fuel to continue going? My answer to that question is we have the technical fuel to stay up there for a day, potentially 3, and then see something akin to this pattern where we made those all-time highs prior in July play out this go around. Now, if he comes out and delights and then disappoints, I would not be shocked one iota seeing this massive tradable range up to the 574, 575 area, and one that could come down and break the 550 area, potentially even point us at minimum signal-wise down to this territory. Now, check this out for just a moment. What you're looking at is the main charts, weekly, daily, 4-hour, and 1-hour for the SPY. The weekly chart is all tickety-boo. Price has support all the way down into the 535 area. The daily chart is slowing, but still with buy signal state and a target, as you saw a little earlier in this video. The 4-hour chart is in a buy signal state, but it's completed a sequence of signals and hasn't quite resumed. It's got some negative divergences. It's hit its target too. So as we get closer to now, the 1-hour chart, for example, is evacuating its buy signal state. So what I'm looking at is, again, something that you may have heard earlier this week, dip and bounce. Now, today, the market move, could you consider it a dip? Well, my answer to that question is no. It's not quite the dip, right? So we've just got a little bit of a blip rather than dip, and today we are left in a technical state where I'm going to add a couple of the indications of the subchart here for you. And I want to share with you Rob's ITP triggers, my triple S indicator, Take a look at the weekly chart. Upward sloping channel, positive cross structure, blue on the triggers. So triple S is the one up here. Triggers are the second subchart. Blue on the triggers, rising from below the zero line. The story on the daily and the weekly chart is the positive momentum is not gone. It's slowed enough to warrant a pullback to refuel, or simply to rescare the market and let it know, now this is a time where volatility is still afoot. Taking great care in decision making is very important. I'm super excited to be with the team tomorrow afternoon, trading right into the live event, and I'm super excited for Stacy Brovitz's option session tomorrow. I want to share with you what he's going to be doing. Effectively, finding trades using proven technical tools that you see me use in videos like these that Rob Hoffman himself developed, award-winning champion trader. And when you look at the agenda he has, he wants to show you how he spots options trades that most options traders just don't find. Now, if you've never traded options, or if you are an advanced options trader, this session covers the entire spectrum, and there'll be something there for you, from shorter time frame to longer time frame, from very defined risk to higher risk. And of course, Stacy's been doing some great work with his team over there, and he will be sharing some of those results with you live and how he uses these tools in this market. It's a do not miss session. Go to www.becomeabettertrader.com/yes and get your seat now. Tomorrow morning, 10 a.m. Eastern Time, September the 18th. Looking forward to seeing you there. Have an incredible rest of your day. Bye for now, all.